All right, team. Woo! Wore my money green shirt today for a lot of reasons. I may have to wear this shirt every day. We were really hoping for a nice big green candlestick bar today in the mortgage-backed securities chart, and we got it. Yes! Money green shirt. If I'm wearing it every day, you guys know why, okay? It's not because bad things are happening for me. It's because we like charts in mortgages where bonds go higher and rates go lower, especially after the pain that we've been put through the last few weeks. So today's going to be very quick and dirty. Mondays are absolutely, completely, and totally crazy and insane as a mortgage loan officer. Absolutely, completely insane. And today was no different. I am reeling and have much more to do. So I'm going to make this quick, but I am going to show you what's happened and a little bit of confirmation on my theory about what is moving interest rates. It's not what it normally is, and today really proved that to us. So I'm going to show you what's up with that and kind of what we can expect from here. I did make a prediction last week. You'll recall I had a number. I'll show you where it is again, and we'll take a look at that. So let me get my one-man production moving here. Showing my screen. I don't have time for anything fancy today. This is going to be what it is. This is the 2% coupon mortgage-backed securities chart from mbshighway.com. Barry Habib's outfit where they show us what the heck is going on with mortgage-backed securities. Remember here, it's important to note when you see these prices going down, that means interest rates are going up. We want these prices to go up so that interest rates can go down. We're going to focus in really here on the last 3 days. So if we look back to Thursday, it was horrific. This red candlestick right here broke all of our hearts. And then the rebound, huge on Friday, up 109 basis points, taking out 2 resistance levels was beautiful, beautiful thing. Really saved our arse. And that was when I started to make the assumption about the correlation between, normally it's stocks and bonds that are the yin and the yang. They're the yo-yo. My theory about oil being what's moving this seems to be playing out. Now, we've only got confirmation for a few days in a row here, paying attention to this. So we're going to keep monitoring this. We really need a good 8 or 9 out of 10 days to say that this is the new correlate. But we're going to keep an eye on that. So we got this 109 basis point day right here. Boom. This big green daddy long leg. Then I decided to throw on a green shirt to start the day out today. Not because KT's favorite color is green, and every time he sees me, he goes, "Daddy, green." I love that too. But today it was because I wanted to see a green bar. Now, today is one of the few days where Barry missed it. He issued an alert to lock today when prices were trading below. They moved down below this key resistance level here, this big red guy right here at 180. Prices dropped below that. He issued the alert to lock. They missed it today. The bonds rallied later in the day and ended up closing above this resistance level, which is great. Remember, my price target is up here. I think we're going to get to 102.50 or somewhere in that range, maybe a little bit less. You know, these averages, they're coming down right here, like this 25-day. I think we're going to meet that somewhere. And I think it might be around this range here. Hopefully, be somewhere right in there, which means it would happen soon. That would give us back more than half of what's been lost in mortgage bonds and help suppress rates a little bit lower, make them a little bit sexier for buyers. The question I'm going to answer today in today's video with regards to this has to do with the question that I got right here on Facebook, and I get it every day. Hey, is it a bad time for buyers now? Is it a bad time for buyers now if rates have gone up? Let's answer that, and then I'm going to show you oil. I'm going to show you the market. And I'm going to show you the correlations here between these three things, because this is how we're going to track what's happening. And if you want to get a quick glance at what's going on, this will be the things to take a look at. So I'm going to show you all those things. Is it bad for buyers to buy in a market where rates are going up? Well, look at the other side. Think about it this way. If you're a seller, you're going to sell your home. Do you want to hear that rates just got really low, or do you want to hear that rates just got really high? If you're a seller, you really want to hear that rates are low, because we know what happens when rates go down, property values go up. So if you're a seller, you definitely want low rates. Now, if buyers and sellers are on the opposite sides of the transaction, what do buyers want? It sounds weird, but higher rates are good for buyers, except for people who are buying a new build. If you're buying a new build, I've got several of those people right now. They're buying a new build, and it's still months out, And it's like, hey, this is one of the risks you take when you buy a new build. Who knows what rates will be when this property's done and you can actually lock it. But we have longer lock periods, which actually helps us on those new builds a lot with people who are concerned about that. And they should be. It also hurts people who maybe just got into escrow. You were quoted 2.75, now it's 3.25. You just got into escrow finally, you've been fighting the good fight, and you get rewarded with a higher rate than you thought. So for some people on the very edge of the knife, they'll get cut. But for a broader perspective, rising interest rates or rates going up is good for buyers because it should weed some people out. It should weed out competition. It should give you a better opportunity to purchase. That's the short answer. Everyone's situation is different. All right, let's go back to looking at a couple things here. So here's a mortgage bond chart. This beautiful, beautiful day that we had here today, up 23, right here. This guy, that's the guy right there. Thank you very much. I may be wearing green shirts every day from here on out if we keep getting big green candlesticks like that. Let's take a look at the news. No, I don't want to support you with ads. Sorry. CNBC's been driving me crazy with this pop-up lately. All right, so give me a second. Number one pet peeve. Go to click on something else pops up, click on the wrong thing. So today, the Dow Jones was up 600 points today. The reason why it's important to watch Jim Cramer, whether you like him or not, or whether you think his shtick is good or not, is because he has a feel for the market like no one I've ever seen. He said this market feels like it's going to pop soon. He said that on Friday. He said, I hope it doesn't, but I think it's going to pop. And it did. And so it popped 600 points today on the Dow Jones. This is specifically for you, Ricky. I quote the Dow Jones because I know you hate it. He thinks I should talk about the S&P. So 31,535, not an all-time high. I don't think we hit an all-time high. No. But, making up a lot of ground, right? And 600 points is a big, big day. Now, typically in the past, if we were up big like this in stocks, bonds would suffer. Bonds would go down. My theory was, of course, that it's oil that is the concern. Well, let's look and see what oil did today. Aha! And oil is actually down a little bit more than this since we looked at it on Friday. Remember, oil is open more than the stock market is. It's not open every day, but it's open more days than the stock market, more hours. And so when we last looked at this, I think we're down a couple bucks from there. And so that, I believe, is what we can actually look at now. Oil, let me see, dang it. Let me make sure my one-man production is... Yeah, okay, good. So I still need to get rid of that. All right. Just want to make sure you can see it. So oil is down, bonds are up. Now we have another confirmation of this correlation. It is not necessarily, stocks and bonds where money is flowing. It seems to be that the concern in bonds is about hyperinflation. We know we're already experiencing inflation, for sure. That's definitely happening. We also know that the Fed has told us that there is no inflation, that inflation is tame. It's fine. Nothing to see here. But the oil world will tell us some things, right? Because oil is a tax on everything when oil goes up. It costs everybody more money to do everything, literally. And we know that, obviously, the last time Biden was in the White House with Barack Obama as president, we saw the highest oil price we've ever seen. I believe that the bond market got scared to death because oil was up 60% since Biden was elected. And they thought, hey, we're going to run away to 100, 120 bucks in oil. And that is what spooked the bond market. This is my guess. We continue to see these smaller correlations. We'll see if this pans out. Like I said, I need at least 8 or 9 out of 10 on this. Operation twist. Oh, yeah. Yep. Good. Yeah, see Mark's. Let me see here. Can I put this comment up? Why can't I add this comment to the broadcast? That's lame. I see your comment there, Mark. I don't know why I can't add it to the broadcast. That's ridiculous. I don't know if there's something that's keeping me from doing that. But yeah, Operation Twist. So there are things that the Fed is doing to obviously combat what's taking place. But what I'm looking at here, and they're always going to be doing that. It's going to be hard to kind of know, except for until they tell us. But what I'm looking at here is the immediate future of mortgage rates, which I think is super important. Because if we lose 1% and we gain 1/2 back, and then we keep doing that, we'll be at much higher rates here before long. So I want to see, what is it that we're tracking? What is it that's going to correlate with mortgage bonds? And right now it appears to be oil. So that's pretty much going to be the update for today. I still have a lot of calls to make. and it's already 5:30. But I did want to just let everybody know this is what's going on. This is where we're at. I think we had a good day. The green shirt worked. And I'm not going to do a drum roll, but I will give you thank you for one important green day in the mortgage bond market, which we'll just look at one more time here real quick in case you just joined us. Basically, this was Friday, huge day, up 109. Today, up 23 after struggling early on in the day. Didn't look good. Looked like this down. So this was the thing that I was concerned about was even though we had that big up day, this downtrend was still intact. And, maybe that's not a great drawing of this downtrend, but either way, this downtrend that was going on was still intact even with that. And you see that a lot of times. It would rally. It's like a false rally, profit-taking rally, whatever you want to call it. And, then it ends up turning around and going the other way. We did not have that today. Today broke that. Makes me feel really good, not just being through that trend line, but also through this resistance line here. And I think we're headed up to better interest rates in the next few weeks. I don't know how long this will take, but I do think we'll see better rates in the next few weeks. So hopefully that's helpful to you guys. If you or someone you know that is has questions about a VA home loan, please have them give me a shout. That is what I do. I provide these updates so that we can all be educated, so that we can have good discipline together to help people out as much as possible, give people good information, know what's going on. Hopefully appreciate that. Know someone who needs information about a VA loan, have them give me a call, NMLS 155010, or a text or an email. I would appreciate that. And I'll be back again soon to let you know what's going on, keep things rocking. And we are going to do something really fun, not this Friday, but the following Friday. We're going to start a show with my old producer. Is going to host it. It's going to be really fun, called The Bottom Line. And we're going to run through tons of stuff. So I have just bazillions of video topics that we're going to discuss, a whole bunch of things and break them down to bite-sized things. So we'll do that live here on Facebook. That'll be fun. Not this Friday, next Friday at 3 p.m. And we'll do that every Friday at 3 p.m. We'll run through all kinds of stuff. So it'll be really fun. All right, guys, have a great night. Share this video. I'll see you soon.